Welcome to Illuminati Silver. We tell the truth about silver. Today is Tuesday the 4th of August 2020. And on Sunday we published a video entitled Economic Figures and Interest Rate Decisions Affecting Gold and Silver Prices This Week. And on Saturday, of course, our Gold and Silver Weekly Update for the week ending the 31st of July. And we've placed links to both of these in the description box below. Well, it has happened at last. Gold has hit $2,000. And silver has surpassed $25 and touched $26. Now, at the time of producing this video, which is 2030 GMT plus 1, gold is standing at $2,007, just off its 2009 high, and silver is $25.76, having touched, albeit for a brief moment, $26 today. Now, before we analyse this, let's look at other market data. The Dow is up 108 points at 26,772. The S&P 500 is up 2 at 3,296. And the Nasdaq is up 2 at 10,905. European markets closed marginally up. The dollar index is down again at 93.28. And that's down 0.255. Now, economic manufacturing data published yesterday was okay, though not great. But motor vehicle sales for July was up by 1.4 million vehicles compared with June. And factory orders announced today, though, were down for June compared with May, but still remained a positive 6.2%. Now, Reuters have just published a report in the last half hour or so, so let's take a quick look as to what they've had to say. Reuters article, dated 4th of August 2020. Headline: Gold soars past $2,000, gold up on stimulus hopes, by Herbert Lash. Gold surged past the $2,000 mark on Tuesday after Democrats and the White House appeared closer to agreement on new stimulus to help the coronavirus hit economy, while stocks on Wall Street traded mixed as investors awaiting more aid from Washington. Oil prices also rose on the prospect of more stimulus, but Treasury yields fell to their lowest since March on safe haven demand and concerns about the ultimate cost of aid. Markets have lost confidence that Congress will approve enough stimulus to provide adequate benefits, leading the Federal Reserve to boost its balance sheet, said Lee Ferridge, head of North America macro strategy for State Street Global Markets. It all falls back on the Fed. That is what's driving this, Ferridge said. Gold is outperforming. Treasuries are outperforming. It's all about the debasement of the dollar. Gold prices breached the psychological $2,000 level for the first time, propelled by hopes Washington will approve more stimulus to combat the economic toll of the still spreading pandemic. The U.S. Senate's top Democrats said a new round of coronavirus relief was moving in the right direction, though the two sides remain far apart. Spot gold prices rose 1.42% to $2,004.81 an ounce after bids earlier hit highs of $2,009.134 an ounce. Bullion has soared more than 30% so far this year, supported by lower interest rates and safe haven buying, on concerns Fed policy and government stimulus are debasing the dollar. The bond market, which is at loggerheads with equity markets over stimulus and its role in the economy, is skeptical about the prospects of a rebound in economic growth in the third quarter. There is concern about how much the stimulus package will help the economy and its cost over time, said Kevin Giddis, chief fixed income strategist at Raymond James. The 10-year US Treasury notes slid 4.8 basis points to yield 0.5151% after earlier trading as low as 0.51%. MSCI's benchmark for global equity markets rose 0.47% after earlier hitting a 5-month high, less than 4% from its all-time peak in February. The index was lifted overnight when stocks rallied in Asia on relatively strong manufacturing data from around the world reported on Monday. On Wall Street, the Dow Jones Industrial Average rose 0.31%, the S&P 500 gained 0.04%, and the Nasdaq Composite dropped 0.13%. Wall Street shrugged off new upbeat data after a report showed new orders for US-made goods increased more than expected in June, suggesting the manufacturing sector was beginning to claw its way out of the pandemic's deep pit. The Commerce Department said factory orders rose 6.2%, boosted by a surge in demand for motor vehicles. Despite the second straight monthly gain, orders remained well below their levels in February before lockdowns sapped demand. Brent crude futures rose 28 cents to settle at $44.43 a barrel. US crude futures gained 69 cents to settle at $41.70 a barrel. US gold futures hit a record of $2,023.09 an ounce and settled at 1.7% higher at 2021. A pretty clear explanation of what is happening, and a company which we have recommended from time to time to our listeners and subscribers, BullionVault, also had something to say about their experience regarding gold demand. First thing this morning, let's take a brief look at their article, which is slightly dated now because we are some 12 hours later. BullionVault article dated 4th of August 2020, and this was at 0901 GMT +1 this morning. Gold investing is seeing a wave of profit-taking by existing owners, but the metal's jump to new all-time highs is not deterring strong demand from new investors in the precious metals, reports Adrian Ash at market leader BullionVault. Only 7 months in, 2020 has already seen BullionVault attract more new clients than any full calendar year, except 2011's peak of the global financial crisis. Net gold demand over the same 7 months also marks the strongest ever January to July period for the online and smartphone fintech opened in 2005 and now caring for $3.6 billion of gold, silver and platinum for more than 85,000 users worldwide. So while the initial shock of the COVID crisis is retreating, the appeal of gold as a tool for spreading investment risk continues to shine as the pandemic's long-term economic damage becomes clear. July saw new interest in buying gold jump, most notably in the US and the UK, where private investors are now less than 100 days away from election 2020 and 150 days from the end of the Brexit transition period, respectively. Gold bullion prices in July set fresh record highs in all currencies, breaking the summer 2011 peak in US dollar terms to average $1,843 per ounce across the month, with a rise of 6.4%, the fastest gain since February 2016. In response, the number of BullionVault users choosing to sell gold jumped by 58.2% from June's figure to reach the most since June last year, while the number of net buyers slipped 2.9% for the month. That saw the Gold Investor Index, a unique measure of trading activity in the world's largest single pool of physical precious metal investors, slip to a 5-month low, down from 57.9 from June's reading of 60.2, and sharply lower from the sudden 9-year high of 65.9 hit in March. Outside the COVID crisis, however, July would still have marked the highest gold investor index since Donald Trump's election victory, spurred a surge in gold investing in November 2016. Between them, the UK and US accounted for 57.5% of July's first-time users on BullionVault, the largest proportion of new clients since April 2018 and strongly above the prior 12-month average of 40%. While that helped July become the 8th strongest month for the first time, users in BullionVault's 15 years of operation, all other top 10 markets showed a slowdown in the growth of new precious metal investors, after all setting fresh monthly records since the catastrophe of coronavirus reached Europe in March. Germany's count of first-time buyers slowed by 26.5% in July from the prior 12-month average, while Italy was down by 20.9% and France by 19.3%. The UK's, in contrast, saw July's number rise 81.1%, as the US leapt by 116.1%. So it seems that the Anglosphere's increasingly febrile politics are adding to the uncertainty and doubt over a V-shaped recovery. Let's go on to silver. Silver prices also jumped in July, rising 15.2% on a month average basis in US dollar terms, the fastest monthly pace since the UK's Brexit referendum in mid-2016, to reach a 6-year high at $20.41 per ounce. Well, look at it today. That spurred a surge in both buying and selling on BullionVault, where investors trade silver free of the VAT sales tax usually applied on the industrially useful precious metal, saving up to 20% immediately compared to coins or small bars, with total volume rising by 155% from June by value to hit a new all-time record of $83.3 million across the month. With the number of silver buyers up 57.4% from June to the most in 4 months, and the number of sellers up 92% to a new record high, all-time high, that took the Silver Investor Index higher, rising from 57 to 58.9 last month. That would have been a 7-year high if not for the new all-time Silver Investor Index record of 75.1 reached as the COVID crisis hit this March. Last month's gold trading volumes meantime jumped 50.1% by value from June to reach $104.4 million, the most since March's all-time record of $206.7 million. Let's skip a little bit because it'll be too long otherwise. Will August offer a pause or even a change of direction? The surge in gold and especially silver prices must be expected to take a breath at home at some stage, but even net of fresh profit taking, the first few days of the month here at BullionVault do not suggest any slackening in the underlying strength of gold or silver demand. It's also worth noting that dramatic though July was for gold prices, last month's rise of $111 per ounce has been beaten 3 times before in dollar terms. September 2012, August 2011 and Jan 1980, when the daily average jumped $220 and 35 times before in percentage terms. Might this current bull market end with a similar blow-off top against a similar backdrop of geopolitical tension, social unrest and runaway inflation? Investors and savers thinking about seeking safety in gold or rapid gains in silver will no doubt be closely watching November's US election and the UK's final exit from the European Union in December. That was written by Adrian Ash, Director of Research at BullionVault. End of article. Yes, it's very interesting to hear what a company is experiencing in various countries across the world, to at least give us some guide to what is actually happening in the marketplace. Now, of course, there are other experiences out there, other companies doing similar sorts of trade, and there are, of course, the ETF purchases, which have been significant, gold and silver, and in recent weeks, these have been hitting, if not all-time highs, very significant highs, and these should not be forgotten about either. So where do we go from here? Well, the signs are still positive for precious metals. And as mentioned on Saturday, there's a plethora of economic data to sift through this week. But also some geopolitical disturbances and problems in the Middle East recently announced this evening, which in our view will boost gold and silver potentially even further. There is a lot happening and a lot to comment on. And we would appreciate to hear your thoughts on where gold and silver prices in your view are now heading. Thank you so much for listening. If you haven't already done so, please subscribe to this channel and press the bell sign so that you'll be notified of our videos as and when they're published. Also, do not forget that we also operate our Richard and Greg channel, and we placed a video on this 2 days ago, and another one will be placed on it later this evening. And once again, if you haven't done so, kindly subscribe to that one too. Again, not forgetting to press the bell. Thank you so much for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.